All right, good morning, everyone. We're going to kick it off here. Last night, obviously, there was no action in the S&P. The U.S. markets were all closed, as well as London yesterday. So we had an exceptionally quiet day yesterday, and we got a little bit of catch-up probably to be played today. The overnight in the Asian session, we saw a bit of mixed action on very light volume, really no leadership whatsoever. We had the Hang Seng down a scrap, the Kospi down a bit, the Nikkei barely up, Aussie more or less flat, the Shanghai more or less flat. So very little to take out of any of that action overnight. Obviously, right now we're going to see the European markets open up a bit this morning, especially the FTSE, which didn't trade yesterday, showing about 30 points up on the session, and the S&P futures up about 5 points. This chart's quite interesting. We continue to see, when we talked about the market kind of sleepwalking higher, we talked about yesterday. This is actually a brilliant chart here showing the S&P versus the volumes and just market participation really dropping out as we're drifting to new highs. And guys just starting to kind of lose interest at taking on more risk at these levels. If that continues to go on for too much longer, then it'll probably end up starting to flush out some shorts. But bottom line is that the big volume days have been on the down days, and the up days have been exceptionally light volume days. All right, this morning we had Adcock Ingram was out, came in line with guidance, with recent guidance on the trading statement. Headline earnings per share, the loss of 23 cents. Revenue was at 2.43 billion. The expectation on Bloomberg, that was prior to the guidance that was revised lower, was for 2.69. So it's probably somewhere closer to what they would have expected after the recent trading statement. Divi per share came out as 0, though, so that's probably definitely a disappointment. Expectation was for 60 cents. Mr. Price also going to come out a little bit later. The guidance is for 772 on the recent trading statement. We're looking for Divi per share around 310, revenue is probably a little bit higher than that after the trading statement. So, all right, moving on into market data out today. We've got French consumer confidence in just a bit. We've got leading indicator numbers here locally right at the open. We've got consumer confidence in Italy. Locally, we've got GDP. We're literally expecting contraction for the quarter on the GDP number. Then later in the States, we've got lots of data. We've got durable goods, consumer confidence, Richmond Fed manufacturing, Dallas Fed manufacturing, and then we've got PMI numbers as well. So the States, we've got some reasonable data here. Locally, obviously, we've got the GDP numbers to have a look at, but other than that, not a whole lot to focus on. Obviously, with the markets being closed yesterday in Europe and in the States, we didn't have any real significant movement, and we definitely didn't have any significant movement on volume. So not a ton of stuff to show you guys on the charts, but we'll try to throw a couple things in there that are interesting at the moment. The first one I'm actually going to show is MTN over Vodacom. So that is the price of the ratio of MTN divided by Vodacom. You can see they were getting back up here close to 1.8, which is the top end of where we've ever gotten was 1.8, and we've kind of been, the higher end has always been between 177 and 1.8. We've really, the consolidation for the most part has always been probably lower, and especially recently somewhere between the 1.7 and 1.55 level, and we've definitely just kind of spiked up out of that. I'm not 100% sure what that's for. I know obviously Vodacom had a bit soft, some reasonably soft earnings here recently. I would have thought that would also negatively impacted MTN, but Vodacom also had a good acquisition, I think, at what the market thought was a good price with Neotel. So this probably could potentially be set to kind of reverse as it gets to the top end of this spectrum over the next few sessions. But just keep an eye on that. That could be an interesting play. All right, we'll look at Able here. We'll take this to a year chart. I was kind of anxiously waiting to see how this was going to play out the last couple of days as we pop back up here and test the breakdown on from when we dropped support, or we dropped out the bottom to new lows, and we literally just kind of popped it back up to test that area where we broke down from in a kind of a classic bear flag pattern, and really just kind of dropped out the bottom of it as of yesterday. Not a hard day of selling, but I think what we're going to want to see is this thing to drop back below 9 Rand. If we can drop below 9 Rand, I think we can really accelerate to the downside again, and this will be prove to be a real failure if it does start trading back below there. Okay, we'll look at Tiger Brands, which we had shown a couple times. You know, Tiger Brands obviously dropping back down here, or broke out a couple days ago from from resistance, really spiked up hard to about 308, and very quickly made a pullback yesterday, trading all the way to 295 right before the auction. You can see there 295 was the level that we pegged as the breakout when we got above 295, and really coming back to test that as of the late in yesterday's session. Provided that holds, this thing will probably look to start to push back higher again, but that's going to be our key level to watch again, is 295. If we drop that, then this thing could be right back down into, with some pressure on it, but if we can hold, then we could definitely potentially push to new recent highs. All right, and then the last one I'm just going to show is Naspers, and I'll show if you look here and kind of come from the highs back in January, which was where we made the left shoulder of this head and shoulder pattern, you can really see there's quite a definitive lateral support level here at that shoulder line, and I would kind of throw it somewhere where we bottomed out yesterday. I call it 1192, which is basically exactly where we bottomed out yesterday. And you can see we're really we're putting a little bit of consolidation right on top of that support line. We've got 5 days in a row now where we've held above that support line, and I think that the longer that we can hold this, the more bullish it is, and kind of setting the stage for us to really take this thing to new highs. Obviously, Goldman came out a few days ago with a huge price target upgrade. I think they took the price target up to 1,800 Rand, and definitely cheaper than a lot of the U.S. social media peers. So just keep that in mind. We can consolidate here and maybe push back above 1,200, especially taking out the recent highs, call it at 1220. Then I would say that this thing could really move higher. And that's it for today, guys. Good luck.